Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So as you all know, today is a big day. It's another Thursday. We will be looking at what's currently happening in the markets, what we are expecting for the rest of the day, and of course, we're looking at technical price action patterns. So good morning, and thank you for joining this session. Hello, Maurice. Hello, PAW Vlogs. Thank you for joining the session. So the very first thing I would like to begin with is a couple of setups that are quite clean and clear. So as you all know, for the US Tech 100, we were expecting that after this breakout of this channel, we would be seeing the price rally all the way up to this resistance. So we got very close to that, but the market didn't quite actually get to the target. And since then, we have seen the big sell-off happening here. Since then, you can see the market pulling back downwards. So it's a similar story across the top indices in the US. They attempted to go up yesterday and then eventually pushed further back downwards. And what looks like a market correction or a double top. So we could be seeing some further downside happening in the top 3 US equity indices. That's the Dow Jones, the S&P 500, and the NASDAQ. So the most important setup for today seems to be Brent oil. So Brent oil has been pretty bullish, especially considering that yesterday we had the OPEC Plus meetings. And now the market is testing a very key trend line that has been holding since April. So there has been quite a number of tests of these trend lines. I believe this is the 5th time the market is testing this level. So from the 1-hour chart, this is how it looks like. So the market is really attempting to break towards the upper side. So if there's a breakout, then we'll be looking to go long and target even higher positions. But then if the market fails to break that level, then it's time to look for short selling positions. So for now, it's a matter of wait and see. We don't have a break yet. The market is currently exactly at that level. So we wait, we see if the market breaks towards the upper side, we go for bullish positions. And of course, if it fails, then we go back downwards. So it's also important to notice that the top of the pattern is somewhere around here. So this is around $80 per barrel. So if the market was to break here, the overall expectation is that the price would rally to $80 per barrel. And of course, if it were to go back downwards, then we'll be looking at the most recent low, and this is about $71.8 per barrel. So this would be a really nice target if we were to see the market rejecting that level. So on the majors, we saw the pound USD having made this break towards the upper side. Made a retest, pull back upwards, another retest, pull back upwards. And now it's developing a sequence where in this case, we can identify there's some form of consolidation around this area here. And on the lower side, it's along this other trend line. So it basically means that the pound is attempting to break higher against the US dollar, but it seems to be fading every time. So it's a matter of wait and see. But most promising seems to be the USD JPY currency pair, which was literally trading in this consolidation here for quite a period of time. So the consolidation is as follows. We have seen the market trade along this path for quite a period here. And this is basically 4 straight days. The market was just moving sideways. And if you compare here, you can see what was happening here. So the market was not making a major move for 4 straight days. Before early this morning, when the market broke towards the lower side, kept going down, but now from the last 2 hours, we are seeing a very strong rejection of lower prices. So as I've been saying, the USD JPY is basically biased towards the upper side as a result of the monetary policy between the Bank of Japan and of course the US Fed. So on one side, you have one central bank that is very aggressive in hiking interest rates, and the other one is not hiking interest rates anytime soon. So as a result of this divergence, we were observing this previous high to be acting as the support. So the market broke that level temporarily, but what we are seeing from the last 2 hours is a very strong rejection of lower prices. So we had this reversal happening here on this candlestick. And then on the next one, the market attempted to go down, but rather pull back up and closed here. And there's a good chance we'll be seeing some further upside. So in this case, our most recent high is somewhere around here, 144.69. So the overall expectation is that the price makes a recovery, gets back into the pattern, and rallies all the way up to 144.69. So there is a good chance we'll be seeing this play out for the rest of the day, or perhaps through into tomorrow. So Without going further into the technical analysis, let's get straight into the economic calendar and see what we will be expecting for the day. So early this morning, we had the Australian trade balance coming in better than expected at 11.79 billion Australian dollars. Then we had the Japanese 30-year bond auction, and of course the German factory orders month over month, which came in stronger than expected. So in this case, for the month of May, factory orders came in 6.4% higher. The overall expectation was 1.1%. And of course, the previous reading was 0.2%. So it's basically showing some form of resilience happening within the Eurozone. So if you look at the entire week, you notice a similar thing happened yesterday. So there are economic indicators that are showing some form of resilience in the Eurozone. So just need to customize these, make sure everything is selected. So this was yesterday. You can see French industrial production came in stronger than expected. If you look at the final services PMI, they were much weaker, but for French industrial production improving, and of course, seeing Germany industrial production improving is an indication that the Eurozone could be starting to recover. So for the US, it was a contraction. So factory orders came in at 0.3% higher. This missed the expectation of 0.7%, meaning that we are seeing a slowing manufacturing in US, but then in the Eurozone, manufacturing is beginning to improve. So besides this, we'll be looking at construction PMI. This will be coming in at 11:30 a.m. So this could cause some volatility in GBP pairs. So of course, we know that if the UK economy is resilient, then the Bank of England will have more room to continue hiking interest rates. So that's the overall thought process for this particular data point. So if we see an improving economy, and we know that inflation is still significantly high, then we know that the Bank of England will be more confident to hike interest rates on its next meeting. So the same case applies for the Eurozone. So we are seeing a resilient factory orders sector. And then we'll be looking at retail sales at midday. So in this case, if retail sales improve, let's say come in higher than 0.2%, then we'll be pricing in a potential rate hike, which would be both positive for the euro. And of course, if UK data comes in stronger, then it's also positive for the GBP. So the second day of the OPEC meetings will continue today. So as we all know, in these meetings, we don't normally get any media coverage, but their attendees tend to share updates, especially through social media. And we'll be looking at policy hints from the OPEC members, and with key focus on the Saudi energy minister who will be attending this meeting. So besides these, we'll be looking at the ADP non-farm employment change, which would potentially serve as a leading indicator into the non-farm payrolls tomorrow. So we know that the NFP is tomorrow. It will be happening at 3:15 p.m. 3:15 p.m. is today. For NFP is 3:30. So we will be getting job data coming from Canada as well as the US at the same time. And this is expected to be highly volatile, especially for USD pairs, gold, and oil. And of course, the top US equity indices. So for today, once we focus on this data, the ADP non-farm employment change, it will be a leading indicator on what to expect on the NFP. So clearly, the previous reading was a rise of 278K jobs. And now we're expecting some form of slowdown to 226K jobs. So if you get this number or even higher, then it would suggest that we will be probably looking to see a bigger number in the NFP. So later on, we'll be looking at the Canadian trade balance. This is 3:30 p.m. We don't expect much volatility from these unless there is a big surprise number. And of course, the unemployment claims are currently at 239K. So we will be expecting this weekly data point to also give us a hint on what to expect in the non-farm payrolls on Friday. So there will be a speech from FOMC member Logan. And of course, towards the end of the day, we will be looking at the final services PMI for the US. Previous reading was 54.1. We don't expect much of a change. ISM services PMI, previous was 50.3. We expect an improvement to 51.3. And of course, the jobs job openings. This will be an also an important data metric to estimate the value of the non-farm payrolls tomorrow. So when you combine the three data points, the ADP non-farm employment change, the unemployment claims, and jobs job openings, then we'll probably have a figure or an expectation for the NFP. So if they all improve and we see a much tighter job market, then we will be expecting that more jobs were created in the last 1 month. And this will give us a vision on what to expect tomorrow. So the big news is tomorrow, but of course, even today, we will be expecting to see some more volatility. So remember, on Tuesday, this is when we had the Americans celebrating the Independence Day, so the market was closed. So a lot of volatility in the markets resumed yesterday. You can see Monday, Tuesday, nothing much happened. Then on Wednesday, we had some volatility, and today the volatility has increased even further. So for gold, yesterday, as Americans resumed trading, we saw the market attempting to break this level. There was a quick liquidity grab here, and immediately after that happened, we saw the price of gold dropping, and this was a considerable drop. Just want to make sure that you guys can see this. So after this, you can see there was a sharp drop. The market got to this area and started going up. So if you look at this, the bouncing point was around 1914. So this has not been on our radar. Mostly we've been looking at the 1919 price level and of course the 1909. So from then you can see the market has been attempting to go back up with failure. And now it seems like the market is moving back downwards. So there is a good chance we'll be seeing this move continue to play out. And perhaps we'll be seeing the price drop to yesterday's low or the low at the beginning of the day. And perhaps 1909 will be on focus. So when you move to the dollar index, you can see that early in the morning, it was pretty weak, but in the last 1 hour, it has resumed some form of strength and is now on course to make a recovery of all the losses it had made in the morning. And if we continue seeing a strong dollar, then the expectation is that we will be seeing a reversal here in pound USD and the market moving back downwards. So similar case for Euro USD, it got to this particular trend line and then pulled all the way back towards our support. I remember making this analysis here on Monday that we'll be expecting to see price drop here. So it took quite a number of days, but we eventually got here. So in the early morning bounce, we are seeing the market continue to push down lower. So there is a good chance we'll be seeing some further downside pressure on Euro USD. So as for USD CAD, as we already mentioned, this was some form of flag where the market was trading within this channel. So eventually the market managed to break here, and this was yesterday, retested and pushed even higher. And today we will be looking for a potential continuation higher towards our target level of around 1.3356 level. So this is the potential target here. Not very far off. And if I zoom out here, you'll notice that this was a major trend line that was just broken and the market is pulling back to retest that level. So in this case, I will be expecting the US dollar to continue being the bully here and continue gaining against the Canadian dollar. So for Asian pairs, Audi USD made a break here, kept pumping even higher. So early this morning, managed to bounce off a very strong support level, kept pushing higher, but somehow it seems that the market is losing fuel. So it's not moving as fast as it was in the early morning. So perhaps we'll be seeing some profit taking, some correction happening, and the market moving back downwards. So just checking to make sure that I've gone through all the majors. And of course, it's important to note that what we are seeing here on the UK 100 or the FTSE 100 is a big sell-off happening. And it's happening across board. So we have seen a big sell-off happening with the US equity indices. So for the UK equity index, it's also going down. And of course, for the Eurozone, I remember sharing this on Telegram as well as on Twitter. So we managed to capture this area here where the market was finding a very strong resistance. And since then, it has been a big sell-off. And now it's almost getting to our first target, which is 42.75. And of course, the second target is 4,249. So it's a big sell-off happening in these equity indices. basically showing that the market is basically beginning to form some form of correction after making some major gains over the last couple of weeks. So that's it for the day. I'll be looking for any questions or comments from your side. Of course, from the financial juice, I don't know if we have any updates here. So hey, Simon, Elvis, Subscribe, Lemuel, Emmanuel, Somi Banks, thank you guys for joining the session. Why is gold selling? Well, it seems all bullish. There has been a lot of rotation happening around the world, where investors are now more confident to invest in risky assets, which basically implies stocks. So we are seeing a lot of investors going for stocks and reduced demand for gold, and this may explain why we are seeing a much weaker gold compared to equities. So hello, Ivy. Thank you for joining the session. Hello, Eric. I think there's a message for JSCode on the comment section. There's a request for link to the Telegram group. I'll be sharing that. So just a disclaimer, this is not the company's Telegram group. This is my personal community. Clarify on gold, please. I think I already shared that. The video is live. You can always go back and review. It's only a couple of minutes and it's live on YouTube. So for gold, I said the best opportunity was yesterday after this liquidity grab. But now from what we are seeing, if you go to a smaller time frame, the 15 minutes chart, you can see the attempt to recover from bouncing from 1914 has completely failed. And now gold is bound to continue with the original direction of the break. So in this case, we're expecting some further downside. So gold is expected to continue pushing back downwards. So with the very short-term target as today's low at 1914, and of course, a very nice target seems to be 1909, which is a level that we've been following closely over a longer period of time. It was the bottom here, and now we'll be expecting the market to drop all the way down to 1909. And maybe if there's enough momentum, we could break that level and move even lower. So remember, these sessions are purely educational, not financial advice. So always do your own due diligence. What's sustaining high prices in stocks and indices while most hedge funds have sold out their holdings? Is it strong economy? Yes. So what we are seeing currently in the US economy is two basic policies that are conflicting with each other. So we normally have what we call fiscal and monetary policies. So the fiscal policies are basically run by Congress, and this is through the budget office. And of course, monetary policy is run by the Fed in conjunction with the Treasury of the US. So while the Fed has been tightening policy by raising interest rates, on the other hand, the congressional budget has been expanding at a higher than anticipated rate. So the US government is spending a lot of money, and this high expenditure is basically serving as a stimulus to the US economy. So as a result, we are seeing stocks continue to benefit from this, since we are seeing the US economy being on a very high speed. So unemployment is a key indicator. It's almost at a 40-year low, which basically means that almost everyone in the US has got a job right now. And this production is being reflected in consumer demand, which is reflecting in equities. So companies are still very profitable, which basically has helped the stock market to recover. So on the other hand, with the Fed continuing to tighten policy, basically means that interest rates have risen. So as a result, a lot of investors have moved their money to money market funds, which basically is giving a guarantee of between 4.5 and 5%. So it's a good return on savings. So a lot of people have been parking their money on those savings. And as a result, there has been a scarcity of dollar. So we are seeing a strong dollar, and at the same time, we are also seeing a strong equities market. So I hope that answers your question, Apollo. What came out of the OPEC meeting yesterday? it's basically this Saudi Arabia basically saying that it's cutting its oil output. It will continue with that policy. For Russia, they basically implemented a new measure to cut their oil exports by 500,000 barrels per day. And of course, a very strong commitment by the Saudi energy minister, where he basically said that they are willing to do whatever it takes to support the oil prices. So they want oil prices to remain elevated so that the OPEC members can continue benefiting from higher oil prices. So far, that's all we have from the OPEC meeting. So hopefully we'll be getting more updates going forward. So thank you very much, guys, and I hope to see you on the next meeting. So remember, today is Thursday, so we will be having our Market Pulse series happening at exactly 8 p.m. So if you have some time, just jump in and we will have some more updates on what we predicted for the day. So enjoy the rest of your day. And as usual, remember the chart of the day today remains USD JPY, which seems like the most promising play for the day, where the US dollar had continuously lost against the Japanese yen in early morning trading. But now we are seeing a very strong reversal and rejection of lower prices. So we will be expecting to see the US dollar start regaining against the Japanese yen, and we could be potentially targeting 144.69 level.